Hey, Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. Today is inventory day, Wednesday, June 12th, 2019. I know I want to make 2 points. If I have that third point, I'll make it. So, point one. My wife and I had a good talk last night. We communicate to each other, believe it or not. And I was telling her about some of the issues that's going on that's kind of frustrating me, and she told me, which I'm going to follow, I am not responding to any of the negative type of comments and so forth for 1 week. So I'm going to just let it go. She told me to just let it go. 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 Anyway, so it's going to be tough, but I mean, I was almost keyboard commando today already, keyboard commando, right? That's what I call getting on this thing and writing up that stuff to make you feel better. Anyway, so 1 week, point two. Occasionally I go out on the tube of you, right here, and look at some trader or another trader. And this trader that I was looking at was with Warrior Trading or Warrior Traders, Cameron Ross's company that he has out there, and the title was what made me click, because he said crude-tastic, $2,400. I'm thinking, wow, did he make $2,400 in a market that was an inside day yesterday? I need to find out what he did. Maybe I can learn something. Well, what I found out was kind of surprising, but not surprising in the same case. He initially entered with 6 contracts, and then he averaged in another 6 in a losing position to get 12. His initial risk was around 31 ticks, actually greater than that at the very beginning. And he exited all 12 contracts with a plus 19. So if you just look at, and so he throws out this big number, and this is my warning to you guys out there. Be careful of these big number quote-unquote trade. I used to do it when I was a younger trader on YouTube too. So I got called out on it, so I watch out what I do. I don't, it's when you figure things out, try to figure it out what it is per contract. That's what is my warning for you to, when you are evaluating someone else, including me. What is their risk to reward, right? In other words, reverse that. What's their reward to risk? If you look at his reward to risk yesterday, it was 19 ticks versus 31. So 19 profit versus a 31 risk. That's kind of reverse of what you really want to do. Now he's quoting a 70% number, and he went into this long diatribe about how he goes about doing his thing. But let me tell you something. Right now, I'm winning on my particular combine, and I'm at 37.5% winning percentage right now, and I'm still winning. What is that telling you? 70% is irrelevant. 90% is irrelevant. In the end, it's how you attack your trading plan, how you plan your trade, how you trade that plan out, right? So trade your plan, plan your trade, trade your plan. So me personally, I don't like to take on that kind of risk per reward. It's not beneficial, especially in the crude oil market, which is the double-edged sword market to start with. So yeah, he was trading the crude oil market, and he made, quote unquote, all this money. But if you figure it out and you put it down to its brass tacks, he only made about $190 per contract. So yeah, they threw out that big number. So basically what ended up happening is he got a 19 tick move. And if you know anything about crude oil, 19 ticks is like that in a fast moving market. And he caught a fast moving market, and he just cleared out his trade. So I watched it, and I thought, wow, that was his secret to his success. He got lucky. At least that's my humble opinion. What is yours? This is Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here. I'll see you on the next video I put together. Bye for now.